Okay, everyone, it is 1 o'clock on Tuesday, November 29th, and thank you for joining me for Real Estate Agents and Brokers versus Ohio Municipalities, Ohio Cities. This is a code change, if you will, to the Ohio Revised Code that affects many of my clients and all real estate agents, realtors, and brokers doing business selling property in the state of Ohio. I feel it's necessary to get the word out there and let my clients know or get them more up to date, as well as kind of spread the word. I did a presentation for a group of real estate agents just about 2 weeks ago, and after my presentation, I brought up some bad news, which is this tax code change. And I was surprised at the comments and lack of knowledge about this particular change. Not only from the agents, but from the brokers in the room as well. There's been no communication from the Ohio Board of Realtors or any statewide agency. So I think this is going to come as a surprise to many agents when it comes time to do their 2016 tax returns. This is something that was passed in 2015, became effective January 1st of 2016, and will have an impact on the number of tax returns you file for 2016 in 2017. My name is Mike McCormick. I'm a CPA and investment advisor representative in Cincinnati, Ohio. I have clients throughout the state of Ohio, as well as clients in several states in the United States. I'd like to start with a look at the actual law. And what I'll do is do a screen share here. We're going to look at the Ohio Revised Code, specifically section number 718.02, income subject to tax. And as you can see at the top here, you see it's the Ohio Revised Code, Title 7, Municipal Corporations, Chapter 718, Municipal Income Taxes. And what we're going to do is scroll down here to section F, as in Frank. And what we're looking at is this section here. And I think you guys can read that. So what I'm going to do is increase it just a little bit. Make sure we can all read that. There we go. This section here. Section here. Okay, so this is the specific section that we see that targets real estate agents and brokers specifically. It's not very often that we see legislation at the federal, state, or really at the local level that targets specific professions or entities or types of businesses, but this one is specific to real estate agents and brokers. So code section 7118.02, paragraph F, subsection 1, except as provided in division F2 of this section, commissions received by a real estate agent or broker relating to the sale, purchase, or lease of real estate shall be situs to the municipal corporation in which the real estate is located. Net profit reported by the real estate agent or broker shall be allocated to a municipal corporation based on the ratio of the commissions the agent or broker received from the sale, purchase, or lease of real estate located in the municipal corporation to the commissions received from the sale, purchase, or lease of real estate everywhere in the taxable year. So this word situs, that means located. We see it a lot in sales tax. A comparable word would be nexus. The transaction is to be treated as if it were in a specific location. So this is saying the sale of the property should be situs to the municipal corporation in which the transaction occurred. I'm sorry, in which the real estate is located. So section 2 of this goes on and really comes into play for people who are residents of municipal corporations or cities. So it goes on to say an individual who is a resident of a municipal corporation that imposes a municipal income tax shall report the individual's net profit from all real estate activity on the individual's annual tax return for that municipal corporation. The individual may claim a credit for taxes the individual paid on such net profit to another municipal corporation to the extent that such credit is allowed under the municipal income tax ordinance or rules of the municipal corporation of residence. I'll show you an example of both of these, and both how both of these are going to come into play for real estate agents and brokers in preparation for the 2016 and beyond tax returns. Paragraph 1 applies to both real estate agents and brokers and realtors, as well as in section 2, it's indicating that if you're a resident of a municipal corporation, you're going to pay municipal tax on all of your net income, which you already do, and you'll get a credit for any municipal tax that you pay to another city on the same income. And we're going to work through a couple of examples here in just a moment. So this is, again, the code section, the tax code that we're talking about, 718.02, income subject to tax, section F, 1 and 2. These are the ones that are important to us today and for you as real estate agents and brokers. Now, the numbers that we're going to look at are probably more reasonable for a real estate agent. A broker would have more transactions and larger dollar amounts. So if you maybe add a 0 to these, it might be more appropriate for the broker side, but the calculations will be very similar. So what we're looking at here is an example of a real estate agent. And in this example, we're assuming that this person does not live in a taxing municipality. So they do not live in a city that has a municipal income tax or a city income tax. And what I've done is kind of picked several groups of cities throughout the state of Ohio. So this yellow section, we're looking at cities that surround or are part of the greater Cincinnati area. Now, there are several more that I could have listed. This just happens to be the ones that I thought of off the top of my head. And they're really relatively close to my office here. I have picked a couple of cities from around the greater Columbus area, the greater Cleveland area is in purple, and then the Toledo area in green. And I also picked Lima, Ohio, which is my hometown. So what I'm saying or showing in this example is that this agent made some sales in areas that would not be considered cities. So in other words, we would call them townships. So we're assuming they received $175,000 in commissions from townships or sales of real estate in townships. They received $15,000 in commissions from real estate sales that occurred within the city of Montgomery, $5,000 from the city of Blue Ash, $3,000 from the city of Mason, $5,000 from the city of Cincinnati, $3,000 from the city of Sharonville, for a total revenue or commission of $206,000. And in my example here, I'm saying that this is roughly what I would expect them to have reported to them on a 1099 miscellaneous from their broker. The broker obviously wouldn't get a 1099 necessarily. From that number, they're going to deduct or subtract their ordinary necessary business expenses. So I'm showing $80,000 in business expenses. This might be automobile expenses, meals and entertainment, gifts for homeowners, E&O insurance. It might be brokerage costs. It might be travel to education events, continuing education costs, those sorts of things. So they're going to have a net income in this example of $126,000. This is what we would expect to be reported on the federal Schedule C or an 1120S if this real estate agent were to be operating as an S corporation or a broker, for as the case may be. So the way we work through this example, so if we look at the percentage of the revenue, 85% roughly of this agent's commission came from township sales. And that 85% is arrived at by dividing the 175,000 by the 206,000. And the same for the 15, the 5, 3, and the 5. So Montgomery, we had 7.28% of our total commission came from Montgomery. So the next step is to determine how much of our income is taxable to each of these cities. So what you'll do is take the Montgomery, for example, you're going to take 7.28% of the net income. the $126,000, and that gives us $9,000 taxable in the city of Montgomery. This is income that you may or may not, most agents probably did not report any municipal sales of real estate in prior years, but now it's become law in the state of Ohio that we'll have to do that. So what we've done is broken out of our total commissions, how much of our net income is subject to tax in each city. So the city of Sharonville, for example, 1.46% of our total commissions was from the city of Sharonville. So 1.46% of our net income is taxable to the city of Sharonville. The term for this is apportionment, and generally there are three factors that come into play in apportionment. There's gross revenue, there's payroll, and there's property held in the different taxing jurisdiction. The state of Ohio has simplified this in this case of real estate agents and brokers, in that we only need to look at the percentage of revenue. So the next step, once we determine the amount that's taxable to each city, is look at the tax rate for that city. So in Montgomery, 1% is the tax rate. In Sharonville, it's 1.5%. In Cincinnati, it's 2.1. As we scroll down here and look at other cities, Parma Heights, for example, has a tax rate of 3%. So if we had any sales in Parma, we would potentially pay 3% on the percentage of our net income that applied to those sales. So we determine the tax. So 1% of $9,000 is $91. So we determined that for each of the cities in which we had sales. So in this case, our tax bill went up by $242. This agent did not have any taxable income in these cities in previous years. I'm estimating that each city tax return is going to cost somewhere between $30 and $50 in addition to your normal tax preparation fee. This may be on the high side, but at least it gives us an idea of what the increase in tax preparation fees may be. For a total increase in administrative costs and additional tax of almost $500 in this set of transactions. I don't think it's unreasonable for an agent to have potential tax filing responsibility in 5 different municipalities. Around Cincinnati, I've got 8 listed here or so. It's very possible that you could have sales in several different municipalities in the same year. This could change each year. It could change. So next year we may have sales in Norwood of $2,500. We might have sales. I mean, it would be odd that an agent would be working outside their home area, but it is possible a Cincinnati agent may receive a commission from a property that's sold in Dublin, Ohio. So maybe they receive a $1,500 commission. That $1,500 commission, $1,500 commission causes them to have a filing responsibility and tax due to the city of Dublin of almost $19. Unfortunately, that also causes them to have to file another tax return, an additional tax preparation fee. The thing that I want to stress here is that I know a lot of real estate agents are do-it-yourselfers. And to use one of your acronyms, I know you guys use the term FSBO for a for sale by owner. Many many real estate agents are, I would say, tax return preparation attempters. You make an attempt at filing a federal and state return. You buy the off-the-shelf tax preparer in the blue box or the green box or whatever color it is this year. Those programs do not have municipal tax forms built into those applications. So you won't be able to do these forms very easily electronically. It really creates a tax preparation problem. So that is the example that I show for a real estate agent who does not live in a municipal corporation. This would follow along the lines of Section 1 of the code, if we're going to jump back there for just a second. So that follows along with this portion of the code. So my second example is going to be related to the second portion of the code, Section 2, and it relates to an agent who is a resident of a taxing city. So when we look at this, I think it's the same information that was on the original example, except now we're saying this person is a resident of the city of Montgomery. So all of their net income is going to be taxable to the city of Montgomery. You might think that's not fair. Well, they live in the city of Montgomery. Montgomery says we tax all of your income. So 100% of the net income is taxable to the city of Montgomery. But they also still have these other municipalities in which they received commissions from the sale of real estate in those cities. And they have to file and pay tax on that income as well. So as we expand this, so this particular agent would owe the city of Montgomery $1,200, and city of Blue Ash, Mason, Cincinnati, and Sharonville as well. So they have 5 tax returns that they have to file in addition to their federal and state returns. Now, the city of Montgomery, they should have been filing anyway because they're a resident. They had to file and pay tax on that income anyway. If we scroll out here, we've got the additional tax preparation fee. I did not put the $50 in there for Montgomery because they're already filing that. That's not a new return. So if we go out even further, what we're looking at is the city of Montgomery wants $1,260, but Montgomery is going to give the resident a credit for tax paid to another municipality, but they only give you credit for up to 1% because Montgomery's tax is 1% of the taxable income. So in these other cities, the tax rates are all over 1%. So effectively, you're paying, you're double paying on some of this income. So Montgomery will give them a credit for $31 for tax they paid to Blue Ash, but they actually paid $38. They'll give a credit for up to $18 for the city of Mason tax, but they actually paid $21. They'll give a credit for $31 for the tax paid to the city of Cincinnati, but they actually paid $64. The city of Cincinnati rate is over double what the Montgomery rate is. And they'll give a credit for the city of Sharonville as well. So their total tax bill for the resident of the city of Montgomery is actually $1,162.14. That's the municipal income tax. They would have always paid the $1,260, but now they've got to report some of that income to other cities and file those tax returns and get a credit against the city of Montgomery. The difference is the $200 plus the $1,162. Their tax bill increased by $1,362. I shouldn't say increased because they would have already paid $1,260 on it anyway. But overall, it went up to $1,362. So my concern is that real estate agents are not aware of this change and will not be filing these municipal tax returns the way they should be. Another issue that was brought to my attention when I spoke to one of the brokers after my talk the other day was that brokers may reconsider their contracts with their agents because now the brokers are going to have a significant filing responsibility with the various municipalities. If an agent can have 2 or 3, 4, 5 cities that they have to deal with, a broker that has 10, 15, 25 different agents in one office, they have 25 different cities that they need to report to. It's a huge filing responsibility. Now, here's the other issue. The city required 80% of the tax liability be paid in by January 15th. Most agents don't know net income is by January 15th. That's a problem. You've got to be up to date on your bookkeeping. You've got to know what your expenses are. I don't recommend that any agent do their own bookkeeping. We automate it. We have a system that connects to your bank account. We track transactions as they come through. We can do a P&L at virtually any time you need one, especially when it comes time for things like estimated tax payments and determine what your local tax filing responsibilities would be. You're going to need a list of all of your sales for the year, and you're going to have to classify them by municipality to determine what these numbers are that need to be used and reported. I'm not necessarily happy about this. I like to do work for agents But this seems to be an onerous filing responsibility that's been placed on my clients. Um, it's going to increase the revenues for these cities marginally. We're not generally talking about thousands or tens of thousands of dollars that a particular agent is going to be filing with the city. From the city's perspective, if they've got 50 different agents that have property there, it's a boon to them. On the other side, the amount that they're going to collect from brokers is going to be significant. But it's the additional filing responsibility. Tracking municipal taxes is difficult as it is. Make this easier for agents or brokers. It's definitely more difficult. I can be reached at 513-488-1121. My email address is mike@cincytaxcoach.com. I do a lot of work with real estate agents. I present to real estate agent groups on a regular basis. If you need a speaker to come in and talk to your agents, I'd be happy to talk about what it is that we do. My goal is to automate the backside of your business. I think agents do a great job running their business right at closing. And I see so many agents' businesses fall apart after they get the check. And I want to help you not fall into that trap, not only from the aspect of digging a hole with the IRS, but not knowing what your numbers are. And you should be able to know with relative certainty, 85 to 90%, what your net income is year to date. You shouldn't have to wait until September of next year to start putting that information together. You're running a business. Let's find somebody to help you do it. And my firm is here to help. Again, the phone number is 513-488-1121. My email address is mike@cincytaxcoach.com. Again, this is a new filing requirement for agents and brokers in all municipal corporations in the state of Ohio. That means any city, does not mean township. Townships do not have a tax base or the authority to levy an income tax for that matter. In the state of Ohio, the tax code that we're talking about again is section 718.02 of the Ohio Revised Code. And the specific code section is section F, 1 and 2. Section 1 applies to all real estate agents and brokers. Section 2 gives guidelines related to those living within a taxable municipality and the credits that's available for tax paid to other municipal corporations. If you have any questions, please let me know. I'm going to put this example back up for just a moment. Again, this is an agent. We're assuming they're not living in a municipal corporation. I'm going to bump these numbers up for a second. If this were a broker, because of the number of agents they might be dealing with, these numbers might be significantly higher. They might have, we know their portion of the commission will be much higher. How it gets allocated among the various municipalities will be determined by where the agents are selling. I don't think it would be uncommon for a broker doing business in the greater Cincinnati area to be subject to municipal tax by as many as 10 or 15 different cities. A broker doing business in Sycamore Township, which is just almost right across the road, could have agents doing business in any one of these municipalities, but they could also be working in Montgomery County and going up to Dayton. Maybe they have an agent that also does some work in Columbus. It's very possible that a broker could have agents working in a number of different municipalities. Then obviously the numbers change and the filing responsibilities change. In this example, we have 1, 2, 3, 4, 5, 6, 7 different filing requirements. This could be any number of brokers could come up against this. Obviously, when we're talking about a broker, things scale differently. So we're still talking about taxation of the net income, but the numbers are just much larger than when dealing with an individual agent. Again, my name is Mike McCormick. I'm a certified public accountant doing business primarily in the greater Cincinnati area in the state of Ohio. I do have clients spread out throughout the United States. I work with a lot of real estate agents. My phone number is 513-488-1121, and my email address is mike@cincytaxcoach.com. If you have any questions about the information that I presented, contact me, leave a comment below, and I wish you the best. Take care. Thank you.